Welcome back to Wall Street Confidential on TheStreet.com TV. Jim, let's talk about what the market is doing right now. Why is it so resilient in light of American Express and McDonald's?
I think this is what happens when you have this kind of support at 12,500. I mean, we hit that level, and the buyers come in, and we didn't seem to get there today, and so I think buyers came in. American Express is bad. I mean, when you listen to the conference call, it's just very bad, and I say bad because we've come to expect good growth from American Express without a lot of defaults. It felt more like Capital One, which has subpar growth and a lot of defaults, and it was a disturbing call. The McDonald's, guy comes out and says neutral and it's a problem. Well, then suddenly people say, wow, maybe it's Darden, which just goes down every day, it seems. And maybe it's Brinker, which had a really disappointing quarter. And I would emphasize that it's more like Yum. This is an international company that has a domestic component, and that I think it's just a fabulous buy here at 55. The financials are, and I own it for Action Alerts, the financials are trying to hold in part because it's very difficult to short them now that Bank of America is buying Countrywide. And I said last night on my show, okay, look, you got to cover your shorts. You got to stop selling Washington Mutual. You even have to stop selling MBI, which I don't like at all. And the reason you have to is because it's very simple. We've reached a level where the Fed has said it's going to cut and deals are going to occur. And it's very hard to stay short, and yet everyone is very short. We got very oversold. We don't have as many bulls as we had. And every market's due for a bounce.
Mm-hmm. And it seems like there's just so much confusion right now. Are there any other words of wisdom you can give to investors who just don't know what to do?
Well, yes. We're in earnings period. And earnings period is 3 weeks a quarter, okay? So you're talking about 12 weeks. There's 12 weeks of the year and there's 40 that are not, but 12 weeks of the year where the market has maximum confusion. It seems to be overlaid now by the macro problems. But I've made very little money in earnings period in my career. So this is a bat on your shoulder. Go listen to conference calls like Alcoa. Like if you go read the Alcoa conference calls, it's chock full of good data about international and domestic. It shows you domestic so weak. One of the things that happens is there'll be 30 Alcoa conference calls next Monday and Tuesday. Read them. Look at them. If you're trading without doing that, it's wrong. And let me just leave you with a final example. Mosaic reported, this week. It's one of my absolute favorite stocks, a fertilizer company. I've really been behind it forever. And they came out and they said sulfur costs were too high because of demand. Sulfur is a big ingredient in fertilizer. The stock goes from 90 down to 86.7. And just down, boom. Poof. And what people didn't realize is Mosaic was telling you to raise numbers, and that if sulfur costs are going up, that just shows you demand is so strong for ag, and we have this harvest where soy is highest ever, and wheat's highest, and corn's ever. And you can if you use more Mosaic product, you get more per square foot. So it's kind of like, if you use the Mosaic drill, you produce more oil. And it was just to me that moment that Jeff Dennison Monsanto drops to 115, 16, goes back to 123, that there's too much confusion. And you can have conviction and buy Mosaic on the way down. But if you do not have conviction, you really cannot trade during this period. It's going to be too hard for you.
And do your homework.
Yeah, and the homework, just so we understand each other, the best way to do homework if you're going to trade is you go and read what every analyst is saying about Mosaic ahead of when Mosaic reports. So then when Mosaic reports, you match the data points, and it says, well, the raw cost should be flat. Well, the raw cost went up. Demand should be up 12%. Oh, but the demand's up 15%. So you have to look at what the benchmarks are. And the reason why you do that is, and I stress this over and over again here, if you know that a company's earnings estimates are going to be raised, that is a preponderance of evidence. I look at it like this. Let's use DICE for a second. The 3 and 4 come up a great deal. The 1 and 1 doesn't come up a great deal. Let's use a notion of the favorite in sports. The favorite tends to win in sports. So, you know that there's certain characteristics in every single game of chance, and this is a game of chance stocks. One of the things that augments your chance is that the numbers go up. Second thing that augments your chance is that the sector is strong. When you have those, it's more likely that you want to take a risk and buy, but you need to know what people are looking for, what metrics people are looking for beforehand, so you're not uninformed.
Okay, thank you for breaking that down for us, Jim. Stay tuned for more Wall Street Confidential on TheStreet.com TV.